Still going live? Yes, we are live. Hello, everyone. Thanks for joining. In this video, I'll talk about gold. And Indian families have had a um, um very big attachment towards gold, investing in gold and buying gold. In fact, India is one of the biggest importers of gold worldwide. So I'd like to talk about if it when should we buy gold and whether if this is a good time to invest in gold. So before that, you'll have to understand there are different markets in India where you'll have to invest. You can invest money. First is the equity market where you buy mutual funds, uh, shares of companies, equities, which are called. And the another one is the bond market. And bond market is not very popular in India, so you might not have heard a lot about it. So what happens is equity market is little risky. So in times of recessions or economic slowdowns, when the markets are not doing good, investors pull out their money from the equity market. They sell off their shares of different companies and they invest their money somewhere where they are relatively they are they feel relatively safer about their investments, like gold. uh, People believe that the price of gold will keep on appreciating and will never decrease, because it has some intrinsic value attached to it. And that is correct in a way. And this is why we buy gold. Now, if you check out the prices of gold, it has been given decent returns throughout the years, between 10 to 15% of returns in past many years. Gold has given us in India. Uh, and if you look at the graphs carefully, you will find that every time the stock market was down, it was crashing, be it the 2000, the bubble of the dot-com bubble of 2000, the financial crisis during 2008 and 2009, the current slowdown in the uh, in Sensex and Nifty in the past 1 year that we are seeing. Sensex and Nifty have not grown a lot. uh, if you check out the gold prices in these three durations, it increased a lot. If you look at gold prices right now, it gained 30% of it gained 30% of value in past several months, right? Why does this happen? As I already explained, people are selling off equities because they're unsure how the equity market will do, and that's why they are invested in gold. Now, if you want to purchase gold, you will first have to look for such opportunities when equity market is not equity market is doing very good. You know, when equity market is doing very good, when BSC, Sensex, and Nifty are touching new heights, uh, people will pull out. What is happening actually is people have a limited amount of money and they're pulling out their money. They are selling off bonds, lands, buildings, whatever. They are selling off other things uh, to get money, and they are investing this money in buying gold and other alternative investments other than equity. uh, Sorry, I did not explain it well. I mixed it up. Let me try it once again. So when the equity market is reaching new heights, everyone is buying equity, right? Everyone is buying equity, so they are selling off all their assets, all their other assets, be it gold or real estate or land or whatever it is, to get money and invest in the stock market, so that they can also get a share of what they uh, share of what the uh, growing stock market. When this happens, the prices of these fixed income instruments like gold and all, they dip, bonds, etc. uh, the prices of these assets go down. Why do they go down? Because there is a lot of supply. People are selling them off a lot. Therefore, the prices dip. If there is an oversupply of something, prices will fall. This often the prices fall below their intrinsic value, below what they should have been fallen. So if you again look at the price history from 2013 to 17, or in fact middle 18, uh, stock market, Sensex and Nifty, they saw a very decent, very big bull run. They were earning about 20%. They were Sensex and Nifty were growing by more than 20% approximately per year, 15 to 20% of growth, which is a very high amount of growth. And at the same time, gold prices were not increasing because people were not buying gold, because everyone was buying equities. And this that was the time to invest in gold. And now when the stock market is down, you have seen that gold prices have suddenly spiked because people are investing there. So first rule is you'll have to find the time when the markets and the equity market is doing very well. You have to understand if the equity market is overvalued at that point in time, and that is the point when you will buy gold. Is this the right time to buy gold? I will say no. uh, yes, there is an environment of economic slowdown in the entire world, and I cannot say for sure, but if the markets go down from here, if Dow Jones Industrial Average, which is kind of Nifty of the US, if that falls, if Nifty falls, if Sensex falls, gold prices may further increase. But we have already seen that they are at quite they are stable for the past several months. They are not increasing, not decreasing. So they might even pick up if trade war. There has been talks of trade war, and Brexit talks are in progress. So if things improve, equity markets will improve, and then gold prices might fall. But if things do not improve, equity markets will keep falling, and the gold price will keep increasing. That is one thing. Other thing is, if you still want to buy gold but do not want to use it, you just wanted to invest some money in it, so you can buy gold to make to make jewelry out of it, to make anything out of it. Or you can just buy gold sovereign bonds. I'll tell you the benefits of the latter. So the gold sovereign bonds, they'll give you the same returns, the same price appreciation. I mean, if today the price of gold is 38,000 for 10 grams, and after 5 years it reaches to 50,000 for 10 gram, you will of course have this 12,000 for every 10 gram of gold that you purchase today. In addition to that, you will also have someone called coupon payments, which are intrinsic to bonds, and you will receive 2.5% every year. 2.5% of 38,000 will be about 3,800, and by 4 will be about 1,000 rupees. So you will, in addition to this appreciation, you will receive 1,000 rupees per year for every 10 gram of gold till the time you hold the bond. Compare this with buying gold. You go to the market, you physically buy gold, 10 grams of gold in 38,000 rupees, and in 5 years it becomes 50,000 rupees. Compare this to gold sovereign bonds, in which you do not have to buy gold, you just buy a bond from the government of India, and your price appreciates from 38,000 to 50,000. In addition to that, you also earn 1,000 rupees per year for the next 5 years. So the returns are obviously better. If you calculate it for 38 to 50,000, the returns will be, you know, um, 33% here, and then we have 40, close to 50% of returns. 35% versus 50%, which is better? Of course, the disadvantage is you do not have the physical gold, and there is not a lot of liquidity in this gold sovereign bond market, but it is quite a safe investment. So if you are not planning to use gold in your daily life, I would say that investing in the gold sovereign bonds will be a much better option as compared to just going in the market to the sonar and buying the gold. Okay. Uh, as per my thinking, my analysis, I will say that currently gold prices are overvalued. These were undervalued a year ago, but after our NBFC crisis and 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 after the NBFC crisis, our equity markets fell like anything, and the gold prices spiked up. So, might not be a good time to enter into the gold market at this point in time. If you still have to enter, you have the option gold sovereign bonds. Uh, yes, this was it. Um, to sum it up first, this might not be a very good time to invest in gold. Still, if you have to invest in gold sovereign bonds and do your research before investing, that's more important. I presented my perspective. You have to research to get your own perspective or maybe get some financial advice from your advisor. Um, Thanks for watching this far. And if you like the video, please press the thumbs up icon. And for any questions, put it down in the comment box. I am also still learning. I'll try my best to answer your questions. Please subscribe if you do not want to miss further updates about investments. Thank you. Bye.